Hello traders, today is the 27th of January. My name is Neville Hornsey, market and trading. And today we're taking a look at the euro versus the US dollar. So this is a monthly chart of the euro versus US dollar. And I've also put on three oscillators. We've got the MACD, the RSI and the stochastic, just to sort of see what they are indicating currently. Price action at the moment is below the 20, the 50 and the 200 period moving average on the monthly chart. We are entering a sort of liquidity gap zone that I've marked up from the highs of March 2020 to the lows of June 2020. I want to see that liquidity get tested in there, see if there's a lack of sellers or some more buyers still present. If we obviously get through that, then we start looking for the swing low of March 2020. If we go to the sentiment indicator on Active Trader platform, the euro versus US dollar at the top here shows that 82% of traders on this platform are bullish. So we're going to see, those guys get squeezed out of their long trades until they go short or they get stopped out. So again, waiting to sort of see this 82% come back down towards 50 or below. Looking at the YouTrading.com Forex heat map, we can see that the USD is currently the strongest currency, following on from the FOMC last night. The euro is mixed across the board. We'll have a look at the data of today. The yen and the yuan are competing for the weakest currencies currently. The Australian dollar, Canadian and New Zealand dollar are mixed, but Canadian dollar is doing quite well relative to everything apart from the US dollar. German GfK consumer climate came in better than expected, came in below the previous month's number, even though that was revised lower. We could say that's good, but the trend has been to the downside, so we need to see more positive data really come in. Spanish unemployment rate is 13.3% currently, which is better than previous. That's obviously good for the euro. Later on, we've got advanced GDP quarter on quarter for the US, and we've also got their important unemployment claims data. Lots of traders will be looking at the durable goods and the core durable goods just to sort of see if there's still supply chain disruptions. Going back to active trader, like I said, the euro versus US dollar looks like it's in a downtrend. It's making lower lows. It's trading below the moving averages. So the momentum is building to the downside on the monthly chart. Going to the weekly chart, same sort of thing. The 50 is about to cross underneath the 200 period moving average. So that would be extra momentum to the downside. We are coming into that liquidity sort of void, if you like, between 1.1 and the 1.12. The stochastic, the RSI and the MACD aren't fully committed to the downside. The MACD is still positive at the moment, even though it is reducing. The RSI is divergent to price action, and the stochastic is showing that things are getting oversold, but not quite yet. On the daily, a little bit clearer. RSI is below 50, so that's bearish. Not oversold yet. MACD is building to the downside. The stochastic indicator is in the oversold area, but we can see that whilst the MACD is red and the stochastic is lower, then that is a bearish trend really to the downside. We go to the intraday chart of the hourly. We can see that we've broken out the channel, tested it on the 24th of January, and now we're moving down, in quite technical patterns. Obviously, just looking here, the 50 at the moment, the period moving average is acting as dynamic resistance. So a good strategy for the coming day till the end of maybe tomorrow. Just wait for a pullback before entering into a short. See if the 50 period moving average holds its resistance again before a continuation lower. That way, we should be able to keep our risk a bit tighter, nearer to the 1.13, and then target a couple of hundred pips to the downside. Obviously, in the next 7 weeks, we're going to be waiting for the actual rate hike. If they don't do it, then we might see the euro versus US dollar reverse. But whilst, like I said, that retail volume is looking for the euro to go longer, I'm thinking that they get stopped out. Hope that makes sense, and I'll speak to you again tomorrow.